Getting on, everyone? Welcome back to another Sunday Sessions video. So today, as per usual, we will pretty much, myself and Luke, go through a few pairs on the foreign exchange markets just to pretty much give you all our bias and our outlook on these as we head into this new trading week. So as we can see on the screen here, focusing in on the 1 hour time frame. Now, this is some analysis that I actually sent out if we see from the tap. So this will be the start of this trading week that's just concluded. So obviously, probably in last Sunday sessions or the start of last week, when I did my analysis, I would have highlighted this demand zone here, where we can see the price has actually come down to tap into that, where we've then seen a reversal and a move has been sustained to come and clear and break that previous high. So obviously, the bias that was established there was correct, and what we can actually do is go down to a lower time frame now, just to try and figure out inside of there if there was any entry confirmation, because it's all well price tapping into a zone, but if there's nothing inside of that that we can use to find an entry, then it's pretty pointless. So looking inside of that, we can actually see that we have quite a vast level of liquidity built up in the market as we approach this region. Now, this is actually acted as technical support or technical resistance. Obviously, it's acted as both in this scenario for a very valid reason. This is because this is a region in the market that the institutions will actually actively manipulate for their own benefit, pretty much. So we see a lot of reactions from this region for obvious reasons. This is acting pretty much as our trading range. We see we've had that level of liquidity built, liquidity cleared by high volume, and it appears that yes, price does come to blow through that zone ever so slightly, but because of the volume that was introduced here, it can be pretty likely that what's happened is the institutions have pushed price down so heavily to make price tap this zone in the first place, obviously with the desire of mitigating that and reversing, but they've executed or pumped too much liquidity in on the downside, which has ultimately caused price to fall lower than they actually desired, therefore giving a slight liquidation of that zone. So from here now, we can see we've obviously had the reversal, the break of structure to the upside, and after this we've seen continuous demand zone reactions, which obviously each one of those is acting as a potential entry for us. So obviously the first one was fairly preemptive. We did technically break this high in here, which would have been a break of structure. After that, we pull back into a sell to buy. The major swing point, however, that I liked to see the break of is the one I've identified here. But once again, once that happened, we had another pullback into the sell to buy region, which is pretty clear because it's the only sell to buy region inside of that with market inefficiency afterwards. So definitely some great potential there. Let's just say we got in from the zone tap itself. We'd always have our stop loss here, maybe account for a pip. So I'd probably round that up to 6 out of OCD, in all fairness. So we've got a 6 pip stop loss there. Okay, now let's have a look where that previous high was in the market. Okay, we can see it is about that level. So that's a 91.6 pip take profit, which actually ends up being a 15.2 IRR trade. Now that is pretty good for, okay, let's see how long it took for price to achieve that. So the entry would have been found Tuesday around 3 p.m. And we would have concluded that Wednesday 7 p.m. So that is around about 28 hours. Is that 28 hours? So just over 1 day. That's 15 RR within a day, given that we just left that trade running. Obviously, however, I always partial at the structure I get involved from, so I would have actually taken a partial around this high, and then I would have let that 50% remaining run to 15 RR. Now, we also had a lot more demand zone hits since then, so there would have been many opportunities for us to get involved. Nonetheless, you know, we had the tap of the major zone, the reversal where price then continued to take over to the upside. So from there, however, we have seen price peak, create a new high in the market, where we've then started trading lower, and we've actually delivered a break of structure. Okay, now, is this break of structure relevant to us? Yes, because it means that longer term, we're breaking now to the downside, and we can start assuming that supply is taking over. Now, the other reason why I see this as relevant is because is this move actually like an up thrust in the scheme of this whole thing as a distribution, you know, where we've curved off. We go to the 12-hour time frame, we can see a huge move higher from all the way at the bottom there. We've moved up, and it appears now that we are curving off, where we could potentially be seeing a distribution form. So that's what I'm hoping to see. This is a major reversal longer term, and what's actually happened now is that price is going to start targeting some of these zones lower inside of this region, where we can start getting involved in longer term sales into those zones. But eventually when price does hit a demand zone that's relevant, obviously we can start looking to hedge in on buy positions for the coming weeks, if not months, given that we expect our longer term bias to be that bullish, to trade as higher longer term. So I do have two supply zones identified inside of this region, 1 and 2, which I believe are relevant. I've identified those on a range of different time frames. The first one lays at 1.0848. And the second one is 1.0923. So pretty much just watching those two zones to see if price taps in, to see if we can actually gain a reversal, in which case confirming that bearishness is taken over, and actually working into that bias. Yes, we've had the break structure, and yes, this could actually be a distribution longer term. Okay, so we're heading on over here to US dollar yen. A pretty similar scenario here, actually very similar scenario to be fair. So we had the major tap into a demand zone. Okay. Now, if you remember my bias longer term, you know, we've traded for a long time up. We were recently delivered with the breaker structure. We started moving lower. I identified a 1 week sell to buy candle. Price has recently tapped into that. We've had some hesitation in the area. And because of the bias I'd established, I assumed that what price was doing is it was sort of just consolidating at this region in order to accumulate, before then getting ready for a much bigger move higher, to then sustain the reversal and creation pretty much of bullishness to continue longer term. Now, I identified this demand zone here, a very clear sell to buy candle. I'm sure we can all see that that's a pretty clear candle, right? So we identified that. Price has come down. It's held this region before making a huge move higher. It appears that the NFP, the non-farm payroll, non-farm employment change, whatever you know it by, has actually sustained this huge spike we've had. Nonetheless, if we actually check this out, we can see very clear bounds have been created, a preliminary support, selling climax, automatic rally, secondary test, sign of strength, spring, the test of the spring, and then price takes off, backed by the NFP, which came out at 130, yeah, so spot on there, which happens that we pull into a zone, we start to accumulate, and then that news acts as the catalyst to make that reversal happen, and make that move be sustained. So we actually come back up to exceed some of the previous highs here in the market. So again, that could have been a take profit hit, or at least some partials, so some potential there in the market. Now, obviously, if we're going to remain bullish, I want to see price longer term breaking structure to the upside, because now that we've had the tap here, longer term, it would be nice to see price now take all the way back up, exceed this high, continue bullishness longer term. However, if it's going to let me navigate this a bit better, okay. I'm not used to navigating on the Mac. I usually use my setup, which has a mouse, which I'm way more used to. I just want to quickly look inside of this region here. If it's going to let me, this is really a pain to navigate. Okay, so I'm sure you can pretty much see what I'm doing. I want to look inside of here just to see if there's any major zones the price needs to come and react to. So what we'll do, we'll replay really quickly onto this time frame. We'll zoom in. Okay, now what do we see inside of here that could be relevant to us? I'm going to go to a slightly lower time frame. Okay, well, we have this major. Okay, that taps that, so perfect. What that does tell me is that there's a potential supply zone right here at this zone. Now, the reason why this is relevant to me is because now that price is getting ready to start making moves higher, as is evident by the fact we've started to see demand take control, I do want to know if there's any potential regions inside of this market where supply has the potential to be introduced, which would be this point right here at 133.75. If we continue bullishness for a bit of time, I'm actually going to be keeping an eye on this little region here to see if when we approach this zone, there's any sort of reaction, any sort of reversal in the market. And if so, obviously we'll be cautious, and we'll use that as a gauge to see what the supply and demand balance is like at that given point in the market. Now, that's pretty much going to conclude my section. I've just run through two markets there, given my bias. You can pretty much see with all the zones, I've talked you through what it is I'm looking for, how I'm expecting the market to react to my analysis and react in this coming week. So obviously, best of luck to you all. Take this analysis and information as you will. I'm now going to pass you over to Luke, who's going to do the same, walk you through a few pairs. But I hope you've enjoyed my section, and I promise you'll enjoy this next one.
Thank you very much, James, for the analysis there. What I'm going to do now is run over some of the pairs that I'm looking at trading this coming week, give you some rundowns, give you some zones and areas to look out for, and then obviously you guys can go forward and apply that to your own charts and trade alongside the LAGFX team this coming week. So the first pair I'm going to be looking into today is the Great British Pound to the US dollar. This is what we currently have on screen here. As you'll see, I have marked out a demand zone. So first and foremost, mark that demand zone out for yourself. As I said, this is on the 4-hour time frames. And what I have done is I have just highlighted this wick from this 4-hour candle here. Okay, if we were to go down on time frames, you'll see that actually it represents and highlights a last sell to buy candle. So the reason why I've highlighted this is because it has been left unmitigated. Price hasn't come to actually clear this area in price before taking us higher in the markets. So I am wanting to see price trade us down, a lot of demand to be introduced, and then we should, in theory, see price take us back up into the markets. Now you may be wondering, well, where would we set our take profit target? Well, if I just zoom out, you'll see here that I've actually highlighted a valid supply zone that I would love to see price trade into. So I am wanting to see a continuation in this bullish structure. Obviously, price tapping into this and trading us higher would be a valid continuation in this bullishness. And I am wanting to see price trade into this zone and then break this structure, this current bullish correction, and then start to trade us lower in the markets. So again, if we just zoom all the way out, you will see how price is creating lower highs and lower lows. So the overall structure of the market on the extreme higher time frames is bearish. So realistically, we want to be trading in that direction. We want to be trading with the majority of traders, and we always want to be following the prevailing trend. But as we are within a corrective phase, as you can see, we are clearly in a corrective phase. As soon as price taps into here, that is when I'll be looking to close those buys and then trade price lower, taking us beneath this previous structural low here. So with that being said, mark out this zone for yourself as a valid demand zone to look to buy in from, and then also highlight this as a supply zone for somewhere to close your buy positions and look to execute sell positions from. Now you might be wondering, well, what am I going to do in the meantime whilst price is trailing down into this? I will actually probably hold off unless I start to see price put in a full-on correction and trade us into this fractal supply zone. I will be holding off and waiting for price to actually tap and penetrate this demand zone. But if you like, you could go ahead and highlight this as a potential sell zone as well. If price does decide to put in a fractal correction before continuing in this bearish momentum, then this could be somewhere we could look to get involved from. But overall, I am looking to buy before I sell longer term. So that is my analysis for the Great British Pound to the US dollar. Moving over to the Australian dollar to the US dollar. Very similar situation. I have marked out a valid buy zone that we can look to potentially buy from. I also have a valid supply zone as well that I wanted to sell from. Now, price didn't actually come to tap into this, as you'll see if I zoom in. Price didn't actually come to tap in or penetrate this zone, but it did clear any inefficient structure that was led beneath it. Now, I do still believe price will come up to tap into this supply zone before trading us into our demand zone. So what we could do is when we are delivered with a break of structure to the upside, we can look to get involved in buy positions up into this supply zone where we would then look to sell, ride it down to here where we then look to buy longer term. Okay, so again, mark out this as a potential buy zone. This is on the 1 hour time frame. Again, you'll see I've highlighted a last sell to buy region. And then if you wanted to, you could also highlight this as a potential sell zone as well. But again, just zooming out and looking on the 1 hour time frame, you'll see how we are within a corrective phase. So this is a bullish correction. Price wanting to tap into this before trading us lower. We didn't quite get the tap, so no positions were executed originally. So hopefully we can get a sweep of this zone, giving us the opportunity to get in on short positions and ride price lower. Moving over to the XAU USD market. As you can see, price came to tap into the 1937 to the 1959 region that I had highlighted and have had highlighted out for a very long time. We've had a break of structure recently. This line here marks a previous structural low. We've seen price trade beneath this, which tells me this market is or could be now trading us lower. Now that we've had an end to this bullish correction, evidently by multiple breaks of structure to the downside, we should and can be looking to actually sell into this market longer term. Now, I've highlighted a potential sell zone as this is a valid last buy to sell region, so I am wanting to see price correct itself, trade us into this zone, and then begin trading us lower. This demand zone here, mark this out for yourself. This is going to be an area in price that is going to affect the current direction of the market. So we may see some temporary bullishness be introduced after we have a penetration of this zone. This is completely normal, as a lot of demand will be waiting to be introduced into the markets. This will be a temporary move higher before more supply is introduced to push price lower. So we could see price penetrate, a break of structure to the upside. This is where price will then trail up into this zone. A lot of supply will be introduced and it will flip that supply and demand balance and then continue trading us lower into the market. So we could look to buy from here, having our take profits set around this sell zone, and then we could look to sell from here, and we could actually look at trading price all the way down to this take profit target here, which is 16.15. So from this move lower, we could actually look to gain back a great return from a position that we would place. So again, just before I go over to the next market, highlight these two zones out for yourself. These are going to be areas we can look to buy and sell from. Okay, now finally moving over to the Great British Pound to the Japanese Yen, we can see that this is clearly a bearish market. Price is trading us lower and lower and lower, creating lower highs and lower lows. So realistically, we want to be looking for supply zones to look to sell from longer term, as we want to be trading with the prevailing trend. Now, if we go down on time frames, you'll notice that actually price is currently within a corrective phase. So with that being said, we could look to take part in this corrective phase in buy positions, take full advantage of that move higher, and then we could look to sell longer term. Now that is just a fractal look here, but obviously we have our overall look on the markets where we want to see price actually trade us up into this supply zone. So with that being said, we have an end target being up here, but we also have a temporary target being here. So if we zoom in and we look more at the present structure, you'll notice that I've highlighted a last buy to sell region. There is a lot of inefficient structure sat beneath that. So we do want to see price trade up, clear all that inefficiency, trade us into this zone and probably pull back into a demand zone that would have been created from this initial move higher. And then we should see a continuation in bullishness, eventually trading us into this zone where we'll then be looking to sell longer term. So what I have done is I have given us a trading opportunity that should arise come the open on Sunday. So you'll see how price has tapped into a valid demand zone. Price has then started to trade us higher. Price is now pulling back to get more demand. And I have managed to find a valid demand zone sitting just here. So I do want to see price penetrate and start trading us higher yet again. So we can look to buy from this zone. So as an example of a buy position we could place a position, let's say here, stop loss a few pips beneath the zone created. So let's just give ourselves a stop loss of 20 pips, which is more than reasonable. We could then place our take profit if we wanted to be safe with our position just beneath the last structural high, as we can guarantee that our take profit should in theory be achieved, because if we are in bullish structure, we have the creation of higher highs and higher lows, so we should see price actually surpass this high, meaning that we would take profit. Or if we wanted to really stretch our profits, we could trade price up and into this supply zone here. Now, as you can see, this really stretches out our risk to reward return. We are now looking at a 1 to 40 risk to reward return. And the reason why we can do this is because we have gone from higher time frame structure to lower time frame structure. We understand the overall bias of the market and we understand what's happening fractally within this market. So we can get involved in this market fractally, giving ourselves a refined entry with a stop loss no larger than 20 pips, but then we can have an end goal of a higher time frame structure bias. So with that being said, we could have a risk to reward ratio of that 1 to 40. Now, even if we trade price just beneath this structural high here, we still walk away with a 1 to 4.86 risk reward ratio, which is still really good returns. So if you've not highlighted out this potential buy zone, then by all means do so. You'll notice and see it on the 5 and 15 minute timeframes. I am looking and wanting to get involved in buy positions from this area, presuming we are delivered the right confirmation. All we need to see is a break of structure to the upside, so this bearish correction to break and for structure to start trading us bullish. Once we have that, we can then look to get involved in this market. Now, that is actually going to summarize my segment of this Sunday sessions video. I hope you guys have enjoyed. I hope you guys have found value in what I have shared with you today. As I said, please mark out all the zones and areas that we are looking at trading from, because they are going to help you exponentially when you place your own positions and you do your own analysis on these Forex pairs. If you have any questions or queries about the analysis I provided today, please leave them in the comment sections below. And if you want more information about what we do and you want to see in real time the positions we are placing, then go ahead and join the Learning Lounge group chat. Now, with all that being said, I hope you guys have enjoyed, and I'll catch you in the next Sunday sessions.